Let's talk a little bit about the psychology of investing. So we've talked about some of the technical factors, how to think about what a business is worth. You want to buy a business at a reasonable price. You want to buy a business that's going to exist forever, that has barriers to entry, where it's going to be difficult for people to compete with you. But all of those things are important, and a lot of investors follow those principles. The problem is that when they put them into practice, and there's a panic in the world, and the stock market's heading down every day, and they're watching the value of their IRA or their investment account decline, the natural tendency is sort of to do the opposite of what makes sense. To be a successful investor, you have to be able to avoid some natural human tendencies to follow the herd. When the stock market's going down every day, your natural tendency is to want to sell. When the stock market's actually going up every day, your natural tendency is to want to buy. So in bubbles, you probably should be a seller. In busts, you should probably be a buyer. And you have to have that kind of a discipline. You have to have a stomach to withstand the volatility of the stock market. Key way to have a stomach to withstand the volatility of the stock market is to be secure yourself. You've got to feel comfortable that you've got enough money in the bank that you don't need what you have invested unless for many years. That's a key factor. Number two, you have to recognize that the stock market in the short term is what we call a voting machine. It really represents the whims of people in the short term. Stock prices are affected by many things, by events going on in the world that really have nothing to do with the value of certain companies that you're investing in. So you've got to just accept the fact that what you own can go down meaningfully in value after you buy it. That doesn't necessarily mean you've made an investment mistake. It's just the nature of the volatility of the stock market. How do you get comfortable? You don't just buy a stock because you like the name of the company. You do your own research, you get a good understanding of the business, you make sure it's a business that you understand, you make sure the price you're paying is reasonable relative to the earnings of the company.